Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, one of my favorite guests. He's one of the great Wall Street guys. He does all the markets: gold, silver, interest rates, bonds, futures, corn, beans, you name it. He does it and charts it. He is the great Charles Nenner, Charles Nenner Research Center, charlesnenner.com. Charles Nenner, thanks for joining us today on USAWatchdog.com.
Well, if you bring it like this, then I'm interested myself what I'm going to say.
Well, it's all true. What I'm saying is all true, and I'm leaving stuff out. So you got a very storied career. You're a very bright guy. I want to start with one of your correct predictions last year. And a lot of people, including me, I thought it was going to crash, and we got a little mini crash. The night Trump was elected, limit down on the futures. I know you watch the markets. We didn't get that crash. It didn't happen for whatever reason, but you said that it would not crash in 2016. You just shook your head and said it won't crash. It won't crash. It'll be 2017. So where are we? Let's start with the markets. Where are we? It looks like this Trump rally has gone way up, a lot higher than a lot of people thought it would go. Where are we with the markets? Let's just start with the stock market.
Well, let's just go back. Since the end of 2014, we were out of stocks, and really for 2 years nothing happened. And in the Trump rally, we went long with the upside price target on the S&P of 2282. Now we hit 2279, so that's close enough. So I don't have a sell signal yet, but I don't want to go long any major positions. The ones I like are the energy and the staples. The consumer staples because they're oversold, and the energy usually in this phase of a Fed situation does better than the other stocks. And I'm still looking for a breakout on the upside for crude. We had an upside target of 54.20, and then it reversed. But as long as it doesn't close below 50, and it breaks out above 55, we can go much higher on crude. So that's the second reason why I like energy stocks. But in general, as long as this S&P doesn't show a good close above 2282, we're not really bullish. Now, why are we not really bullish with all these things going on? Well, Trump has said a lot of things. And if they change the fiscal policy, that could be positive. On the downside, there's some liquidity problems in the market, and I think most of the good news is already in the market, in the stock price, in this big rally. And I think it's going to take longer than people expect for these things to work out, and they will be disappointed. So that's why the market doesn't discount news 2 times. I think the market discounted it already. So I would not say, look, we have Trump now and it's going to change the situations, and that's bullish for the market.
So do you think we get the market crash you were talking about? You said to me that if you're not positioned correctly for this market crash in 2017, that you're going to lose everything. Please explain.
We also, first of all, talked about you have to get totally out of the bonds and bond funds. And as you know, they went almost down 20%. And as I have been writing in my notes, that most brokers that made a career on the bull market on bonds, they have never seen a real bear market. So although the people are down 20%, they tell them, well, it's going to come back, it's going to come back, it's going to come back. And the destruction of capital in a bearish bond market is much more than a destruction of stocks. So that first of all happened, and
you're talking about, and just so I can intercede here, and I don't want to, just so for the people that aren't as bright as you and not as and are like me, you're talking about the interest rates going up and destroying the value of the bonds. That's what you're talking about.
And especially if you're in bond funds, you don't get back your principal. If you own the bonds, you get back your principal at least, right? But then if you bought it at a very low rate because you didn't get any return on your retirement money, and inflation will only go up to 2%, you're already going to be negative on your return.
So stuff like pension funds and Puerto Rican bonds, those are just dead altogether. Those are gone. Municipal bonds, pension funds, like the Dallas the police department, way underwater. Puerto Rico said they're not going to pay. Other bond funds are just getting crushed. All this negative interest rate paying bonds in Europe, all that stuff gets destroyed. Is that what you're talking about?
Yeah, we talked once about even if the economy is weak, and why would bonds go down? Not that I think it's going to be weak, but we just discussed that. And I said, yet the same thing in Greece. If people start really being afraid, they want much higher interest rates in order to give you a loan. So that means as an economy can become weak and interest rates can get very high, like happened in Greece and in Spain and Italy. And I think people should learn from it and not think that what happens in the United States is an isolated situation. On top of that, if you take a look at the bond market in Europe, I'm from Amsterdam, 95% or even 98% of the bonds that are issued are bought by the local people, not by foreigners. And here you have a situation where a lot of Chinese are sitting on these bonds, and they don't want to lose too much money. So it's like, where's the equilibrium? Where is the price that China says we're losing too much money, we're going to sell bonds? Well, then interest rates will shoot up, not even because of economic reasons, but just because China would start selling a big part of their bonds. So that's one reason why we really have to watch the dollar also, because if the dollar goes too low, they're also going to sell their bonds. So there are a lot of things that have to be watched, and I think the situation is much more complicated than most people think.
Do you think that the dollar has topped then? So, well, let me back up with the bonds. Sorry. So the question with the bonds. So you're saying that people might just say, okay, as interest rates go up, we're at the 10-year Treasury 2.4 around there. As interest rates go up, how much pain do they take at 2.5, at 2.8, at 3%, at 3.2? You're saying at some point people are going to sell, and jump out of the bond market. Is that what you're saying?
Yeah, but right now we have a kind of a rally going. Things never, people get sucked in because it goes down, and they say, let's sell. And the debt market, when everybody's negative, the rally starts and says, oh, it's not as bad as it was. And then it goes down again. And then you have another rally, and all the rally doesn't get where it was before. And that's how people keep the stocks and the bonds till the end of the ride, and then they lose a lot of money. So we're right now having kind of a bounce. So they will say, oh, it's not so bad. And if it comes down again in a few months, then the broker will say, see where the rally before, don't worry, it's going to come back. And that's how the individuals that are not professional can never decide where to take a loss.
So your overall forecast for 2017 for interest rates, they're going up.
They're going up, but we have some intermediate rallies.
And how far do you think they'll go up?
Well, I remember on the 30 year we had around 54. I think it's around 53 and a half this morning. But time-wise, we have a little bit more. I wrote a piece last Sunday, I think, which was very, I don't know even how to say it. I can't say interesting about my own stuff, because looking at what the fundamental situation is in the economy, it actually doesn't look that bad for this year. But then I showed all my indicators, and the indicators showed that the unemployment is stopping to go down, and the non-farm payrolls. And although I thought the inflation will go to 2%, it showed me that it's rolling over again. So we will not have inflation of 2%, and actually showed me a much weaker economy than fundamentally I expected. But now I forgot the question. If you can repeat the question.
But you're saying interest rates are going to go up, and how high are they going to go up? How high do you think they'll go up?
Well, depends how long you're looking for. I have people can ask for that if they want. We have just out of my head, I think a 300-year cycle on interest rates, and they're going up for the next 30 years.
And how far do you think they'll go up in 2017? Is probably the pertinent question.
That's a good question. I'm not prepared. I couldn't tell you at the moment.
But you think the pressure is upward?
Yeah, a little bit more. Not substantially, but a little bit more.
And what about the dollar? Is the dollar you have in your pre-research notes that were sent to me that you think the dollar is topping right now? That is,
Well,
it's seeing its top.
that's another strange situation because fundamentally you would say that the difference in interest rates is much more for the dollar. And the difference in economic growth is much more for the dollar. I mean, emerging markets are really doing very badly still, and the euro is struggling. But cycle-wise, the euro should have hit a bottom, and the dollar should go down. So I always said my expertise is not in being a fundamental thinker. I also do that work, but I trust the cycles, and they say the dollar will not go much higher. Now I know a lot of investment managers are preparing for much higher dollar, which means that they want to go into companies that are on the local market and not selling overseas. So that could be a surprise for them. So I know that the investment community is looking for a higher dollar, but my cycles don't show that. My cycles show the dollar should have been topping.
And just quickly back to the stock market. If the dollar's topping in that, do you think we're setting up for a big market crash this fall? Is that where you're thinking that the market will crash sometime this fall?
Well, as you know, I've been saying that for the last 4 years. Wait till the fall of 2017, then you have a major crash, getting the Dow Jones down to 5,000. Not in this year, but until 2020. And that never changed. So that's why it was easy for me to say in 2016, don't expect a crash because cycles show it's too early.
So the crash will actually literally begin in 2017. It's going to be a drawn out affair. Is that your read on that?
Correct. But what I want to explain is, maybe it's not necessary, that the market can come down because the economy is weak and because the economy is strong. The economy is strong, and there's some problem with the pricing margins, which are developing because the wages are going up. Then a market can go down, and when the economy is very weak and you have deflation, the market can also come down. So economics doesn't always help us. I just want to make sure that, as I said, in gold markets, in deflationary periods, gold can go up, and inflationary periods, gold can go up. So actually, you have nothing to build on except the cycles.
And what about your predictions for gold and silver and stuff like that? In the pre-notes that I got was that gold's going to go up, but not yet. Right. Explain.
Well, it's slowly going up. We went long a little bit on gold stocks. It's a slow process, but I think we have seen the low. And it's like I said, it's a long process. If you have patience and you get a nice dividend on a stock like Newmont Mining or Barrick or whatever, just hold it for the long term, and in the meantime enjoy the dividend.
Would you be a buyer of physical gold? I mean, there are reports out that Prince had 67 10-ounce bars. He had 670 ounces in 10-ounce bars. So even Mr. Prince, who had a lot of other, assets, he really small. It was really a small part of his portfolio. He had real estate.
Yeah, but I heard that if you spread out cocaine over gold bars, it's much better to sniff it. So you don't.
You're funny. You're funny. So I want to go on with what you're seeing with the Trump administration, and I know you do all these cycles. I want to see if this showed up in your cycle work. Donald Trump. It looks like he's going to be inaugurated on the 20th. What happens? What's the Trump effect of him getting inaugurated?
Well, the whole world is changing. Not only Trump was one result, but the Brexit. We have in Holland, the right-wing party is the biggest of all. We have it in France. So the whole world is changing. You can say people had enough of the hypocrisy of the politicians. But the interesting thing is all these things just happen when cycles say it has to happen. So I think the whole thing will change totally. I totally agree. And I'm not afraid to say it, because the interesting thing is more than half of the Americans supported Trump, but everybody's afraid to say so. So I always thought that he had to change the whole thing. And especially I think in the Middle East is going to change. I do think he is a person that much better understands Putin than Obama and the Democrats. And I think that he will be tough. And his toughness maybe will lead to the better situation in the world peace situation, although the cycles are against him. Actually, I feel sorry for him, because if this market crashes in the fall, well, maybe you could say like Obama, it was Bush who did it. He can say I'm only 1 year in president, and it's also Obama's fault. Maybe that's how he can get out of it. I think Obama for 8 years said it was Bush's fault. But I always said I feel sorry for the person who's going to be president now, because you have negative cycles, and then usually things don't work out very well. But I think that the United States will be much better off with a different wind blowing in Congress and in the White House. Um, so I'm very interested to see how it develops.
And you think he's overall good or bad? I mean, what do you think the overall effect of Trump's going to be for people, just in general, and your expertise is markets? What do you
I
think?
think I don't. I think he's a bit overrated. I don't think he's as clever as people want him to be. But I see that he's choosing the right advisors, and that's much more important.
Ah, very good. And then I want to get into this war cycle. You know, they had this dreadful vote in the UN, and you've been talking about the war cycle. Just so people know that when you talk about the war cycle, you're talking about big. You said that the World War, it's so big that World War One and World War Two were really part of the same cycle. I think I have this right, correct?
Yeah.
And that the body count for this was huge. And if you take a look at the Gulf Wars, he said that's really a kind of a little blip. You're talking about a big war cycle coming. Will you please explain the big war cycle coming?
Well, like in my research on financial markets, we did research in war cycles, and I think I've been saying a lot of war cycles. But to make it very simple, I said, we're now. I said it already 4 years ago. It's going to flare up everything, everywhere. So what does it mean? It means that if a stock market is close to a top, some stocks are just tanking, and others still hold up. So what you see here is some countries are just tanking, and the rest is still holding up, meaning that we're forming a top, which means is that the cycle is coming into the danger zone. As you may remember, I still looked at a big problem with China and Japan.
That's right.
That
Sure did.
didn't start yet, but we have some problems with the Chinese islands, and I don't know how this is going to continue. I think it's going to come from there. And the people who look at us, if you see that this is a war, and you go back 100 years ago, and then it was 1914 when the big war started, and 100 years ago it was 1814, Napoleon, and then it was 1714, Habsburg. And if you Google, let's say, big war around 600, big war around 700, 800, it always starts in the second decade of a new era, of the new era. So it's very interesting how that works. Well, maybe you can say the people who lived through the other war don't remember it, how bad it is. But usually, as you know, I don't look for reasons. So I still see that there are problems of war and peace everywhere. Something can go wrong. I mean, a small thing that everybody looks at it and doesn't do anything is that we don't know how far North Korea is. If North Korea would just shoot one rocket, then we have a major thing going on. If somebody will put a nuclear device somewhere in the United States, there's a big thing going on. So a small detail, like you remember maybe 1914, that killed just one emperor, and then the whole thing started. So everything is on the edge. And it can ignite any minute. Now, this you saw in France, and this you saw in Germany, and it's still on a small scale because terrorists still simple weapons, but they're getting very sophisticated. And if they could, they would use much more weapons of destruction. And then the world has to wake up, and then you have a major war in your hands.
How about the UN vote? I mean, as Obama, I've never seen anybody take more act. If he would have been just this robust in the first part of his administration, or maybe a couple of years ago, but what he's doing is pretty deadly to the Israelis, and that is a BDS, boycott, disillusion, or dissolve. I don't know what it is, and sanction. And they're meeting in France in 70 some odd countries, and of course they're talking about this in the hearings last week about this whole movement about sanctioning and boycotting Israel and all that. Does that play in? Is that a piece of your war cycle because Israel is such a contentious state and they're nuclear armed?
Did you ever hear the saying "a canary in a mine"?
Mm-hmm. Yep.
So in the old days, in the mine, the people took canaries because if there's not enough oxygen, then the canary is the first one to pick it up. And when the world goes against the Jews, that's the first sign that the world is getting in major trouble. I think, I'm not so worried. I think these countries who are doing this will soon get in such major trouble themselves that they cannot focus on this problem anymore of Israel. They have other things on their hands. So I
And what
remember
do you mean by, and just I just interrupt, what kind of trouble are they going to get into? Financial trouble or terrorist trouble or trouble?
terrorist trouble, financial trouble. I mean, there's balance in the world. If you want to do this, it's going to come back to you. And I don't understand why they think a couple of settlements are the important problem in this world. I mean, I know the Palestinian public relations has been working hard, and then some idiots that think that if we just solve this problem, we have peace. And I don't know how they get that. So it's going to backfire to them, and they will see how they're going under. Now, give you one example. In Holland, before the war, there were 120,000 Jews. And after the Holocaust, there were 5,000 Jews left that came back from the camps. So the Jews are gone. And what do they get? They got millions of Muslims. I have friends that have a problem finding a good school for their children because 50% is Muslim and they're a bit behind. So they have to lower the curriculum in Europe and in Holland so everybody can study a little bit. So this is going to overtake in 1 or 2 generations democracy because they're going to outnumber the Western countries. So it's just a matter of a couple of years and the whole thing is finished. So I wonder why they're not worried about that, but they're worried about a couple of people living in a place, what some people call Palestine, and not understanding that there is a country that calls itself Palestine and says, you cannot live here. It's the only place in the world where Jews are not allowed to live is in their own country. And everybody accepts that. And it doesn't make sense to talk to the countries anymore because they will have so much problem with their own population that soon they have no power to deal with this. So I'm not too worried about it.
And so you don't think that what's going to go happen in Paris with this BDS movement and this a lot of countries ganging up on Israel? Thank goodness the Trump administration is not going to be doing that. Unfortunately, Obama has started the ball rolling. It's going to cause a lot of trouble. And so you're not thinking that this could touch off war, that could lead to war in the Middle East?
Well, what's the connection with war? I don't really understand what the connection is.
Well, that there'd be more increased terror attacks, that there would be increased strife, increased stabbings. Maybe.
I think if they could, there would be much more terror attacks. But I'm a couple of years older than you, to my sorrow, and I remember that when Menachem Begin, people maybe don't remember, was the president in Israel on television, and he had big misunderstanding with Carter, bigger than between Netanyahu and Obama. And they asked him, "What do you think that Carter really doesn't like you?" And he said, "You know what? The Jewish people were 1,000 years before Carter, and there will be 1,000 years after Carter also." So that's my answer.
Okay. And what's your prediction for the stock market then this fall? Where do you think it should be? What should people be doing in the stock market? What should be people do? Where should they be looking for cover, or should they be looking for cover?
Well, as long as the S&P doesn't have a good close above 2283, 82, excuse me, don't be very long, except that there will be some serious corrections and some bounces. I don't think you're going anywhere until the fall of 2017 when the whole bottom is going to fall out. There's simply nothing, if you're a very good stock picker, okay, but I'm just talking about the indices, it continues to be dangerous. Most of the good news was in this rally, like I said, and the hope that Trump will do the right thing is still there, but it will take too long. People realize it's not going to happen tomorrow, and they will get disappointed. So I'm still not very much into the stock market. I don't think there's much to gain over there. And as you remember, I always said for the next couple of years, try to keep your money and not to lose it. It's the major thing. Now, if you look at our research, if you want to go that far, that will help you to play the bond rallies. At least you get some rate of return, but you really have to time it well like we do. They can go to our website, charlesnenner.com, and take a look at the research we will send out for free for a while, and they can see what they think of it. because everything is a timing. Like I said, now the cycles on the euro are bottoming. Who would think so? You can't come up with it if the cycles wouldn't say that. The same thing with gold, and the same thing with the stock market. So you really have to have professional input in order to survive the next couple of years.
Should some people just hold some physical gold? Is that a good idea?
I think it's a good idea.
And physical silver as well?
Yeah, I think it's a good idea.
All right. Well, Charles Nenner, you were talking about that when you sign up, you get a couple of weeks free. Is that right? At Charles?
Right.
CharlesNenner.com is the website, the Charles Nenner Research Center. Hey, Charles Nenner, thanks for coming on and taking us to school. Really appreciate you coming on, sir.
Thank you very much. And let's hope I'm wrong about this war cycle. That will be okay, but I'm afraid I'm not.
I hope you're wrong too, but yes, I'm afraid you're not. Big call that the market would not crash in 2016, and your next big call is the bottom will fall out in 2017, correct?
And please look at our research, so don't wait till the last moment. Let us help you.
Okay, sir. Thank you so much for joining us on USAWatchdog.com.
You're welcome.